Here's what you need to know before you start looking for commercial real estate. Welcome back to the show, everyone. I'm Josh Manchin, and today we're diving into a topic that so many aspiring investors and business owners ask about all the time. These are the essential things you need to know before you start looking for a commercial real estate property. Whether you're thinking about buying your first office building, exploring retail spaces, or even considering an industrial property, the beginning stages can feel overwhelming. But don't worry, by the end of this episode, you'll have a clear framework to guide your search. Understand your investment or business goals. Before you even step foot in a building or hop on a listing site, you need clarity on what your purpose is. Take a seat and ask yourself, am I buying as an investor looking for long-term returns? Or am I an owner-user planning to occupy the space for my own company? Am I looking for cash flow, appreciation, tax advantages, or expansion opportunities? Your goals determine everything. The property type, the market selection, the financing, and of course, the risk tolerance. Know the different commercial real estate classes. Commercial real estate isn't one size fits all. There are several asset classes, and each with its own characteristics. We'll start off with office space, which is great for long-term tenants, but sensitive to economic shifts. Then we have retail, which can be strong if the location has good foot traffic and demographics. Of course, we have industrial, which is in super high demand right now. Just think of Amazon, warehousing, distribution, logistics. And then we also have medical or professional space, which have more stable tenants and longer lease terms. Now, don't forget about multifamily, which is 5 or more units. It operates more like a business than a residential real estate. Understanding these categories helps you match the asset to your goals and risk profile. Location is more than just a zip code. In commercial real estate, location means demographics, traffic counts, access points, zoning, proximity to competition, and future development plans. A few things you need to look into are, of course, the local economic growth. What is the job creation like? Is there tenant demand? And city and planning zoning maps. A great building in a weak submarket will always underperform. Understand the financials, the cap rate, the NOI, the cash flow. Commercial real estate is valued differently than residential. And here are the must-knows. NOI, which stands for net operating income. What that is essentially your income minus your operating expenses. You need to learn something called the cap rate, which is the NOI divided by the purchase price. This determines the return if it's bought in cash. Understand cash flow, what's left after debt service. And understand CAM cost. CAM stand for common area maintenance. This is usually passed through to tenants in many leases. Don't forget about lease escalations, which are annual rent increases, typically averaging from 3 to 4% annually. Look at current financials and projected future performance, and always ask, are the rents at market rate or below market rate? You need to learn the different lease structures. Lease structures greatly affect your expense and your bottom line. There's triple net leases, where the tenant pays your property taxes, insurance, and common area maintenance. It's definitely a lower risk to you as a landlord. There's also modified gross, which are some shared expenses. Then there's a full service lease, where the landlord, as in you, covers nearly everything. It's more predictable for tenants, less so for owners. Understanding lease types will help you analyze deals accurately and avoid surprises. Always review the existing lease agreements. If the property is occupied, the leases are the value. Before making an offer, you're going to want to review 1. The lease terms, 2. The renewal option, 3. The tenant improvement responsibilities, 4. The tenant's financial strength, and 5. Rent increases, expiration dates, and of course any buyout clauses. Never assume you can immediately occupy the building or raise rents. Leases dictate everything. Now, by this point, you're going to want to assemble your professional team early. Commercial deals require more expertise than residential. Build your team before you need them. Make sure to have on your side a commercial broker, a lender or mortgage broker, real estate attorney, CPA, property inspector, and a property manager if it's an investment property. Having the right team prevents costly mistakes and speeds up the transaction. You'll need to understand what due diligence is. Due diligence in commercial real estate is way deeper than most beginners expect. It can include the majority of the following: physical inspections, environmental reports, zoning verification, reviewing estoppels from tenants, rent rolls, financial statements, roof, HVAC, structural evaluations, survey, title review, and the list goes on and on. This is where the truth about the property comes out. Financing works differently in commercial real estate. Most commercial loans require higher down payments, around 20 to 35% of the purchase price. Strong financials, experience, or a solid business plan. DSCR, which stands for Debt Service Coverage Ratio, of usually 1.20 or higher. Shorter amortization periods than residential loans. By understanding this upfront, it helps you shop within your budget. Be patient. Quality commercial real estate takes time. Unlike residential real estate, where inventory moves fast and emotionally, commercial deals require research, negotiation, and patience. Don't rush into the first deal you see. The right property has to make sense, financially, strategically, and of course legally. Thanks for tuning in to today's episode on the key things you need to know before starting your commercial real estate search. If you found this helpful, make sure to subscribe, share the episode, and leave a review. And if you have any questions or want me to cover a specific commercial real estate topic in the future, just let me know. I'm Josh Manchin, and I'll see you next time.